Welcome to this explainer. Okay, let's just jump right in. Today, we're cutting through all that typical crypto noise by unpacking a very specific investment strategy. And we're going to look at it through the lens of one vital, incredibly specific metric. If you follow the cryptocurrency space, you already know it can often feel like the Wild West, right? I mean, it's driven by hype, overnight millionaires, and a whole lot of emotional trading. But today, we're zooming in on a highly structured approach from a channel called TheAbrahamCryptoLand, which focuses entirely on what they call the investor's mindset. And we are going to understand their whole philosophy by zeroing in on one single critical number.
And that number is exactly 5%. Now, in a market where people routinely talk about going all in on some new token, a strict limit like this might seem, well, shockingly conservative. But to really grasp its massive significance to risk management and portfolio longevity, we need to look at exactly how this 5% rule is applied to a specific asset.
So the TheAbrahamCryptoLand made this highly specific decision. They allocated exactly 5% of their total crypto portfolio to a project called Linea. And it's not just a casual suggestion. It is a hard, mathematically defined boundary, which obviously begs the question, why 5%? Why not 10 or 20? Well, the creator is incredibly clear that this allocation is just one piece of a much larger, carefully designed puzzle.
Section 1. The 5% strategy. Zooming in on the Linea allocation. This breakdown brilliantly illustrates the channel's core belief in strict diversification. By isolating Linea to just a 5% slice, that remaining massive 95% essentially acts as a fortress for capital protection. The creator explicitly states that protecting your capital is just as important as finding new opportunities. Actually, think about that for a second. In investing, defense is absolutely as critical as offense. Because if you lose your capital, you literally lose your ability to play the game.
So this specific sizing isn't random at all. It's intentionally designed to manage risk, prioritize capital protection, and ensure vital diversification rather than just betting everything on one asset. The TheAbrahamCryptoLand explicitly rejects the whole idea of dumping all your capital into a single cryptocurrency. By capping that exposure at 5%, the strategy basically acknowledges that, yes, Linea has a defined place in the portfolio, but it absolutely cannot be allowed to sink the entire ship if the market suddenly turns. It acts as a firewall.
Section 2. Building the investor mindset. Psychology over hype.
Notice the stark contrast here between what ruins retail investors and what actually sustains them. On one side, you've got the noise, short-term emotions, hype, those completely unrealistic promises. Those are the things that typically wreck portfolios. But on the other side is the antidote, a relentless focus on long-term strategy, risk control, and protecting capital. The creator makes it super clear that their channel is built precisely to counter the kind of emotional decision-making that spreads like wildfire in the crypto space.
And this psychological discipline, it stems from a very grounded, honestly pretty humble realization. Nobody knows exactly what the future will bring. Nobody knows the exact price that Bitcoin, Ethereum, Linea, or any other cryptocurrency is going to reach. Let that sink in for a moment. By just accepting that absolute truth, you stop trying to be a psychic and you start acting like a risk manager.
Section 3. Process over predictions. Documenting the journey.
You can see this broader scope clearly in the creator's documented journey. We aren't just looking at Linea here. We're seeing the real-time tracking of a wide variety of assets, from Bitcoin to Ethereum to XRP and Bitcoin Cash. It proves that the main focus is on documenting a diversified, real-time process, not just hyping up one single coin. You can see the disciplined price targets and trading systems laid out right there. It's a highly systematic approach.
Which leads us to what this process actually looks like in practice. The primary goal of the channel is to transparently document decisions, track the strategy step by step, and manage the mindset through all the different, totally unpredictable market conditions. It's essentially an educational diary. It's about sharing those hard-learned lessons on risk control as they happen in real time, whether the market is going up, down, or just completely sideways.
Section 4. The long-term journey. A realistic path forward.
In this way, the creator acts almost like an anti-guru. In a space that is literally flooded with people promising you overnight wealth, the TheAbrahamCryptoLand explicitly states, "This is my personal investment approach and my own journey. It is not financial advice." This isn't some premium signal group. It is purely an educational documentation meant for anyone interested in long-term crypto investing and disciplined decision-making. As we wrap up this explainer on disciplined risk management, capital protection, and that 5% Linea strategy, I want to leave you with a final provocative thought to chew on. Take a look at your own approach to the markets right now. Is your portfolio built on hoping for predictions to come true, or are you trusting a well-defined process? Thank you for exploring this strategy with me, and I'll catch you in the next explainer.